Hello, everybody. This is Michael DeGioia with the Trader Newsroom. Today's episode will be about the market sell-off. We had a market sell-off this past Tuesday, but we've so far had a quick recovery. But the big question on everybody's mind is, will the downside momentum continue? We had 2 to 3 up days, but it seems like we're slowing down to the upside. And maybe we're getting ready to make another move to the downside. My name is Michael DeGioia. I'm the Director of Educational Services and licensed professional here with Trader. Jumping in, just want to first remind everybody that our registration is now open for the #1 best trader competition. This competition is sponsored by Cobra Trading, so we're just about 17 days out to the competition beginning, but up until February 19th, you can sign up for the competition for just $100. That covers your data and trading simulator costs, so you get to use your Trader all the way up until the beginning of the competition. So the sooner you register and participate in that early bird discount, the faster and more time that you will have using your Trader prior to the competition. And if you stay tuned to the very end, we're going to be going over the prizes. So thanks to Cobra Trading, our sponsor, we have a whole host of additional prizes this time here with Trader and the #1 best trading competition sponsored by Cobra Trading. So let's jump right into the news. So we had the big sell-off on Tuesday, which was the largest down day since March of 2023. And since then, however, the market has rebounded about 60% of the move down. So we've gone down and we've subsequently bounced up about 60% of that downward move. Now you can see exactly what I'm talking about here with the laser pointer. So this is the SPY, $SPY. This is the QQQ. So the sell-off is a little worse on the QQQ. So the index that was leading the rally to the upside is the index that is now the weaker of the two main market indexes. So the S&P and the Dow showing a little bit more relative strength than the QQQ, which is the NASDAQ or tech-heavy index. Also, you'll notice that the uptrend line has been challenged but has not been broken yet. It's also very relevant because until that trend line is broken, you're not going to really see any significant selling. However, that big down day, most of the down happened in the gap, meaning it happened pre and post market. And we'll take a look at that a little bit more in detail when we go through the market analysis section. All right, so some other items that have been in the news are that retail sales have plunged in January. They were much worse than expected. The retail numbers dropped from 0.08, which was more than the expected 0.03. So basically over double what the expectation in the increase was. So the retail numbers have really, really dropped. Not only that, but we've also seen a weekly job loss increase. So we've seen more people claiming, jobless claims. There was 8,000 more than estimates. That's another key indicator that the Fed looks at when determining whether or not they're going to be raising interest rates. And yet another, this is kind of the trifecta of issues as far as the Federal Reserve is concerned. Inflation also seems to be on the rise again. So, in the past, we were expecting a soft landing due to the Fed having raised interest rates quite precipitously over the course of 2023 and even 2022 to fight inflation. We thought inflation was coming down, but now inflation has reared its ugly head again, and it seems that the problem is not quite finished with yet. So as a result, we expect the economy to be slowing down. We suspect the economy is slowing down. But we're not quite as slow as we had hoped. If the economy was really slowing down, then the Fed would be cutting interest rates to kind of spur on the economy. But in this case, we are seeing that inflation is still a problem. Retail numbers are slowing down. There are companies laying off individuals, but they're not quite what the Fed would be looking for if it was going to actually cut rates in March. The expectation of a rate cut in March is dropping precipitously low. All right. So another indicator that the market might be ready for some kind of a sell-off or correction. So you know what a correction means? A correction is 10% down off the market's highs. Certainly, we have not had that since I think around September of October of last year. But again, once we got into correction territory, the market rebounded right up. But with markets near all-time highs, the downside risk seems to be increasing. And that's first and foremost from economic data, such as inflation, unemployment, etc. Those all indicate that the economy is slowing, the overall economy is slowing, especially lots of warning signs from China. Also, interestingly enough, Japan is no longer the third largest economy in the world. Germany has supplanted Japan as the third largest economy in the world. So that's the United States, China, then Germany, then Japan. All this is just fun facts. The big indicator that a lot of traders and investors are nervous about is when you see somebody like Jeff Bezos, the founder and key shareholder in Amazon, selling $4 billion worth of Amazon stock. And when you see a chart pattern that kind of looks like a head and shoulders pattern, so goes Amazon, so goes the market. If Jeff Bezos is selling, what does Jeff Bezos know about the stock market that we don't know? That's what traders and investors start to ask themselves. If Jeff Bezos is selling $4 billion worth of stock, why is he selling $4 billion worth of stock? And is that telling us that maybe the markets are going to come down off these all-time highs very soon? That's a good question that I would be asking myself as well, as a trader and as an investor. So in the last 4 days, he's been selling $1 billion a day. Certainly, and you could see that in the stock chart as Amazon stock has come off. It's put in a high and then a failure to make a new high. So a high and a lower high at kind of all-time record pricing. Amazon had done extremely well on the last earnings. Obviously, that was the Christmas season, as you would expect Amazon to do well with. But needless to say, Jeff Bezos cashing out. Now, usually insiders like Jeff Bezos will say, oh, I was just cashing out for this or that. I was rebalancing my portfolio. But $4 billion worth of Amazon stock is a lot of rebalancing, even for Jeff Bezos, right? I mean, we know that he's super rich, but the idea here is why is he cashing out at this time? He did file all the appropriate, filings. I think it's a 144 letter, et cetera. But needless to say, this is a key indicator when you start to see insiders like Jeff Bezos selling boatloads of stock. All right, so let's jump to the market analysis section. I'm going to go take it to the charts. We're going to look at some key stocks and charts for us to kind of analyze. So let's jump right in and let me bring up my Dash Trader. So we pretty much had I'm just going to pop up my chart. So we went all the way from 60% to a pretty much 100% retracement. Now we're closing near here at the highs on the market. So we closed the day near the high of the day. This is going to make kind of a double top. I think the key is going to be Friday's action. So this is Thursday. That was Wednesday. The big gap down was on Tuesday. So the question here is do we gap up, which would be a novice gap to the upside? And then a novice gap up would have a tendency to fade down. So if we have a gap up tomorrow, which is Friday, okay, anywhere near the 504, 503 level, then what we would want to see the market is the markets to fade down. A fade down, a novice gap up, and then a fade down that then triggers what's called a gap and crap. That means that after it gaps up, that it kind of craps out and continues to sell down. That would be the key indicator that we're probably going to expect more downside action next week. Not obviously, since tomorrow is the end of this week, that it would be a key indicator for next week. Now, when you look at the weekly chart, we've been up now for 1, 2, 3, 4, 5, 6, 7, 8, 9. We had one down week, 10, 11, 12, 13, 14, 15 We have literally been up for 15 weeks straight since the lows of October. So that's a tremendous move to the upside. We have what's called a hanging man bar. Tomorrow's close and the close of the week is going to be a key indicator to tell us whether or not the market is ready for some further selling or not. Now let's take a look at the Nasdaq. This is on the S&P. On the Nasdaq, we are already indicating a bearish reversal bar on the hanging man, which is the last weekly bar. Okay. And you can see that the close was not quite as bullish on the QQQ as it was on the SPY. Okay, now let's take a look at some key stocks like AAPL. Apple, certainly not bullish at all. Apple having a head and shoulders and showing kind of relative weakness to the markets. AMZN, which we already looked at. Amazon also showing some relative weakness, but it is still near all-time highs. It does have a high and a failure to make a new high. Microsoft, MSFT, another stock that has a high and a failure to make a new high. Microsoft actually broke its uptrend line. So a break of the uptrend line on a leading stock like Microsoft is also a bearish indicator. There was the uptrend line break. Now, if Microsoft starts to sell off below 404, it is a trigger to the downside, which is a it's got a long way down. It does have a little bit of support at 398, but then next level below that is 370 with a small point of support at 384. Needless to say, there's a long way to go down there. Let's take a look at oil, USO, because inflation tends to be a byproduct of oil. So if oil prices start to go up, that will increase inflationary pressures, and inflationary pressures will then drive down the stock markets, right? So more inflation. So oil looks like it's about to take a run to the upside. I'm going to put in OIL, which is oil. I'm going to put this on a daily. Let's see, USO as well. USO definitely looking like oil is going to make a move to the upside in the near future, especially on the weekly chart. We kind of formed a low base pattern here and might be making a move back to the point of control at around 81, which I believe it's, I'm not sure what the correlation in barrels, price per barrels are, but certainly, you know, somewhere near 81 on the USO. USL, which tends to be the better one to trade and hold long term, is at 37, but has a move up to 40 on it. Let's take a look at the old man gold, GLD. GLD also putting in what looks like a bull pennant for a possible secondary move to the upside. That would indicate weakness in the dollar. Gold gets stronger when the dollar gets weaker. GBTC, let's see, GBTC, which is Bitcoin. I mean, Bitcoin has made a tremendous run since they've opened up trading, you know, Bitcoin to other ETFs. GBTC has participated, but that also means that there might be more competition for GBTC, which was one of the original Bitcoin ETFs, but now you can open up. They've been buying maximum amounts of Bitcoin since the Bitcoin was opened up to be traded on ETFs. Let's just bring in XOM just to bring in a really big oil stock. So XOM, which is one of the, you know, ExxonMobil, having a big move to the upside, very much mirroring the chart for oil. So you can see here that oil might be making a move up. That would be negative for inflation, also negative for the markets, as more inflation means less likelihood of a Fed rate cut. And that pretty much wraps us up for the market analysis section. What it does look like is that we will be having more volatility in the near term, and that's something that traders and investors is good for traders and investors, but that you most certainly need to be aware of as you go into my next topic, which is the #1 best traders competition. So it is that time of year again. It is our fall winter spring trading competition. There's 17 days to the start of the next competition. But you have the early bird discount, which means that you can participate for just $100. You can register now, and Cobra Trading has given us some phenomenal prizes. So besides for the normal prize, which is bragging rights and coming to the NASDAQ market site and hanging out with me and the rest of the Dash Trader team in New York, you also have a $1,000 locate credit, a trader computer for the first place winner. You get dual monitors if you're the second place winner, and a $300 locate credit. And then, of course, you get a stream deck and a $150 locate credit if you are number 3. Now, if you've already competed in the competition and you placed, you can continue to join up until you make first place. As you all know, every first place winner gets 9 months of the Dash Trader Pro platform. Second place gets 6 months. Third place gets 3 months. You get a keepsake photo behind the NASDAQ ringing podium, as well as a tour of the NASDAQ and the closing bell ceremony. That goes for all 3 of our placed winners. So certainly, if you have not joined the #1 Best Trader competition, this is your time to do so. Join us in the next #1 Best Trader competition, sponsored by Cobra Trading. And I look forward to seeing you in the competition. And that's just a couple of days away. Now, just some further announcements. Stay up to date with all things Dash by signing up to our monthly newsletter and emails. Simply fill out the form at the bottom of our webpage at www.dashtrader. Subscribe to our YouTube channel at Dash Trader TV. Follow us on social media, LinkedIn, Twitter, Facebook, and Instagram. That's all for today, everybody. I look forward to seeing you in 2 weeks. Jill should be back for the next episode. Look forward to seeing you trade well, and hopefully you're going to be the next #1 Best Trader. Trade well, everybody.